Most people spend their entire lives working, saving, and hoping that someday, somehow, they will have enough. And yet, the financial system they trust with their future is quietly doing something that almost nobody talks about. Right now, at this very moment, the purchasing power of your money is eroding, not slowly, not gently, faster than most people realize. And while millions of people are watching their savings lose value in real time, a small group of people made a very different decision. They chose silver. Not hundreds of thousands of dollars worth, not a massive institutional portfolio, just 500 ounces of physical silver. And what that simple decision could mean for your financial future is something that most mainstream financial advisors will never tell you. Stay with me, because by the end of this video, you are going to understand something that most people completely miss, and it could genuinely change the way you think about money forever. If this kind of analysis matters to you, take 2 seconds right now and hit that like button and subscribe to Gold and Silver Intelligence. We cover what the financial media ignores. Now let us start with a number that might shock you. Over the last 100 years, the US dollar has lost more than 97% of its purchasing power. Think about what that actually means. $100 in 1924 could buy what would cost you over $3,000 today. That is not inflation as a minor inconvenience. That is the systematic destruction of savings. And here is the part that almost nobody talks about. That process is not slowing down. According to official government data, the US money supply has expanded at a pace that would have been considered impossible just 2 decades ago. Trillions of dollars created out of thin air. And every new dollar printed quietly steals a little bit of value from every dollar you already have. Now here is where things get interesting. Silver has existed as money for over 4,000 years. Longer than most civilizations, longer than most empires. And in every single era of monetary crisis, every single period of currency debasement, silver has done something remarkable. It has preserved wealth while paper money collapsed around it. But that is not even the most compelling part of the silver story right now. Because something is happening in the silver market today that is unlike anything we have seen in modern financial history. And it involves a number that might seem small at first, but when you understand the math behind it, everything changes. That number is 500 ounces. Let us do the math together, because this is where the story becomes very real. At the time of this script, silver is trading in a range that most financial analysts agree is significantly below its true fundamental value. But let us be conservative. Let us use numbers that are grounded in evidence, not hype. If you own 500 ounces of silver today, and silver moves to just $50 per ounce, your position is worth $25,000. That alone would make most people take notice. But here is where it gets serious. Multiple credible analysts, including those who correctly called the gold run to $2,000, are pointing to price targets for silver that are far higher than $50. Targets of $100, of $150, and in the most aggressive but historically grounded scenarios, targets that would represent a complete repricing of silver relative to gold. At $100 per ounce, 500 ounces becomes $50,000. At $150, it becomes $75,000. Now here is the detail most people miss entirely. The gold to silver ratio. This is one of the oldest and most important metrics in precious metals analysis. Historically, for most of recorded financial history, the ratio between gold and silver has averaged somewhere between 15:1 and 20:1, meaning it took 15 to 20 ounces of silver to buy 1 ounce of gold. Today, that ratio sits at levels that are historically extreme. Gold is priced many multiples higher than silver relative to that historical average. What this means in practical terms is that silver is significantly undervalued relative to gold by almost any historical measure. When that ratio normalizes, and based on every previous cycle it eventually does, the math for silver becomes extraordinary. If gold continues on its current trajectory and silver simply reverts to a more normal historical ratio, the implied price for silver would be dramatically higher than where it trades today. 500 ounces positioned before that normalization could represent a generational financial opportunity. But here is what most people still do not understand about why this is happening now, in this specific moment in history. We are living through what many macro analysts are calling the most significant monetary transition in decades. Central banks around the world, and this is documented, this is not speculation, have been buying gold at the fastest pace recorded in modern history. In 2022, central banks purchased more gold than at any point in the last 55 years. In 2023, the buying continued at a similar extraordinary pace. And in 2024 and into 2025, the trend has not reversed. Now ask yourself a simple question. Why would the institutions that print money, the very people who tell you to trust the paper currency system, Why would they be rushing to accumulate physical precious metals at a record pace? That question alone should make you stop and think. And if gold is being accumulated at that scale, silver is the market that institutional money has not fully arrived in yet. Which brings us to the single most important supply fact in this entire video. Here is the detail that changes everything. Silver is not just a monetary metal, it is an industrial metal, a critical one. Silver is used in solar panels, in electric vehicles, in semiconductors, in medical devices, in advanced electronics, in military technology. The green energy revolution that governments around the world are spending trillions of dollars to accelerate, that revolution runs on silver. And here is the problem. Silver mine supply has not kept pace with demand. According to multiple industry reports, the silver market has been running structural deficits, meaning the world is consuming more silver than it is producing for several consecutive years. When you have a monetary asset with thousands of years of value history, trading at historically undervalued levels relative to gold, with industrial demand accelerating and mine supply constrained, and you can hold 500 ounces of physical metal in your own hands, the math stops being theoretical and starts being very, very real. Now here is where the situation becomes much bigger than just price targets and supply charts. The geopolitical dimension of silver is something that mainstream financial media almost never covers, but it is happening, and it matters enormously. Major powers are actively working to reduce their dependence on the US dollar as the world's reserve currency. This is documented. It is not a fringe theory. The BRICS nations, Brazil, Russia, India, China, South Africa, and now several new members, have openly discussed trade settlement mechanisms that reduce dollar dependence. When the dollar's dominance as a reserve currency faces structural pressure, the assets that have historically functioned as alternative stores of value benefit enormously. Gold benefits. And silver, which has always moved in gold's shadow but often with greater velocity, benefits even more. The scenario where silver prices remain suppressed at current levels becomes increasingly difficult to justify the longer this macro transition continues. But that alone would be important, and something else is happening at the same time. The retail silver market is experiencing something unusual. In multiple countries, premiums on physical silver, the amount buyers pay above the spot price, have remained elevated even during periods of price suppression. When premiums stay high, even when prices fall, it tells you something important. It tells you that physical demand is strong, that the people who actually want to hold silver in their hands are not selling, they are buying, and they are holding. 500 ounces is a number that sits within reach of a serious but ordinary individual investor. It is not the territory of billionaires. It is not an institutional play. It is a position that someone working a normal job, making deliberate financial decisions, can actually build over time. And it is a position that, based on the evidence and the math, could represent genuine financial transformation. Here is something I want you to think about. What does financial security actually look like? For most people, it is the ability to weather unexpected crises, to have options when others have none, to be able to make decisions from a position of strength rather than desperation. 500 ounces of silver is not a lottery ticket. It is not a get-rich-quick scheme. It is a deliberate, evidence-based positioning in an asset that has preserved wealth across thousands of years of monetary history, that is currently undervalued by multiple credible metrics, that is facing accelerating industrial demand in the world's most important growth sectors, and that sits at the intersection of monetary and industrial value at a moment when both of those dynamics are becoming more powerful simultaneously. And here is the final layer, the part that ties everything together. The people who understood this early with gold are not the ones who learned about it after gold had already made its major move. The people who benefited most were the ones who understood the evidence before the price reflected it. Right now, the evidence for silver, the supply deficits, the historical ratio disconnect, the geopolitical monetary transition, the industrial demand acceleration, the central bank behavior, that evidence is already present. The price has not fully reflected it yet. That gap between evidence and price is exactly where opportunity lives. And 500 ounces, positioned now, before that gap closes, is the kind of decision that people look back on years later as a turning point. Now I want to ask you something directly, and I genuinely want to know your answer. If the math on silver is this clear, if the evidence is this compelling, what is the number one reason most people still do not own any? Is it access? Is it trust? Is it simply that no one ever explained it to them the way it was explained today? Drop your answer in the comments right now. Tell me where you stand on silver. Are you already positioned? Or is this the video that made you start seriously thinking about it? Your answer matters, and I read every single comment. If what you heard today changed the way you think about money and financial security, please share this video with someone who needs to hear it. The information in this analysis is not something mainstream financial media is going to cover for you. It is the kind of research that only reaches people when communities like ours share it with each other. And if you have not already subscribed to Gold and Silver Intelligence, hit that bell notification so you never miss an analysis. Because the story of silver is still being written, and the most important chapters may be the ones directly ahead of us. The math is clear. The evidence is documented. The opportunity is real. The only question is whether you will understand it before the price does.